Central bank digital currencies, or CBDCs for short, are unsurprisingly digital currencies issued by central banks. About 80% of all central banks are currently researching or already testing such digital currencies. You can be pretty sure that a digital dollar or digital euro are on the horizon. Jay Powell, the chair of the Federal Reserve, the US central bank, once said the following about such CBDCs. You wouldn't need stablecoins, you wouldn't need cryptocurrencies if you had a digital US currency. Well, I think that couldn't be further from the truth, or in Nick Carter's words, the delusional arrogance of these people. No one wants your garbage, see no CBDC. And with that little intro, I welcome you back to another video here on the channel. Today we talk all things CBDCs. What are they, who is experimenting with them, and why are they doing so? What are the pros and especially cons of these currencies? A central bank digital currency is a virtual form of a fiat currency like the dollar, euro, yen, pound or yuan. Instead of a company or decentralized protocol managing the currency, it is controlled by the central bank itself. CBDCs are often thrown into the same basket as cryptocurrencies because both are digital and often use a blockchain as part of their technology. But that's about it when it comes to similarities. In fact, I would argue that CBDCs are the exact opposite of cryptocurrencies, and Bitcoin especially. Bitcoin is a completely decentralized new form of money. Central bank digital currencies, on the other hand, would lead to even more centralization, as they could replace the existing banking system with only one ruler at the helm, the central bank. Central bank digital currency is a threat to commercial banks. It is cosmetically similar to cryptocurrency, but it is just another version of fiat. It's no more a threat to cryptocurrency than regular fiat is. About 90% of your currency is already digital. A central bank digital currency is not novel in its desire to be digital. They actually simply replace a SQL database with a blockchain. Andreas Antonopoulos had a great talk on this. He called CBDCs a technology refresh. That's it. You exchange the SQL database with a blockchain, which is still not open, public, permissionless, immutable or borderless. It's still a centralized one-node operation. But how come all the central banks are so into it then? Well, several reasons. Reason number one, easier monetary policy changes. So far, central banks are only in control of M0, the base money supply. Wouldn't it be neat to get control over M1 and M2 as well, which is mostly in the hand of commercial banks? Let's just generate as many tokens on the blockchain as we like. Reason number two, more options in fiscal policy.
Central banks can also change entirely the structure of how money and monetary policy works, and fiscal policy, because they can give it to different people in different ways. So they can credit the restaurateur, but then penalise with negative interest rates the baby boomer saver, because they want to release their money back into the economy. They can give students a positive interest rates to help them save. They can change everything. So governments essentially using big data can find who they need to stimulate at any time and adjust accordingly. They can do it dynamically. This is a structural, massive shift to everything we understand about economics, particularly macroeconomics. Nobody's prepared for this. None of us know what this means. It means, and it will be sold on, a load of good things. And I think there's a lot of good things that come from this. I think it is an elegant solution to some of our problems. But elegant solutions in governments and central banks lead to unintended consequences.
It can sound nice, but it's actually quite dystopian. More on that later. I mean, CBDCs can be great depending on how they are used. Instead of running helicopter money like the COVID stimulus through other institutions, central banks can directly reach people who should receive the stimulus. Thereby it can potentially erase some of the Cantillon effect, because banks don't get funds before everyone else. Do the central banks have your best interest at heart though? I doubt it, but who knows. Speaking about best interests, reason number three, complete financial surveillance. Hell yeah.
But elegant solutions in governments and central banks lead to unintended consequences. The issue is to have this new system, you're going to give up your freedom. You are going to have every transaction you've ever done and ever will do recorded. There is no cash. There is no way of tipping the gardener unless it goes by cash. It means that they can tax you at every transaction level. Now that's great. We could get rid of the IRS and all of the tax collection agencies because it could be done directly. That's good. But again, you've lost your freedom to transact in anonymity that cash gives you.
Think about Raw Paul whatever you want, his video The Bitcoin Life Raft, the end of monetary and fiscal policy as we know it, is really good. And reason number 4, CBDCs can promote financial inclusion because no bank accounts are necessary. This is a little bit ironic though, because maybe inclusion only happens in case your credit score is high enough or whatever. There is a clear gatekeeper. CBDCs will not be open and permissionless. All the reasons essentially boil down to the same thing: more power to the central banks, which is of course why they are interested. Yep, now it makes sense why almost every central bank on Earth is currently trying to figure these things out. To find out who exactly is at what stage in the process, you can check out cbdctracker.org. There you find a map that updates whenever a nation changes their CBD status. As you can see, there are already a handful of countries with a proof of concept or pilot. Most are still in a research phase. You will see a lot of them popping up in the coming years, and it's honestly a shame. And let us not forget those who urge the Federal Reserve to hurry up and devise its own version of China's central bank digital currency, seemingly unaware that the primary goals of the yuan are to tighten the CCP's surveillance of financial transactions and reduce the power of the electronic payment platforms built by the Chinese tech giants Alibaba and Tencent. CBDCs and free societies are ill-matched to say the least. The West does not follow their ideals when implementing CBDCs. China's yuan and its implications are an absolute nightmare. Since there is zero anonymity involved, China can deplatform anyone from using their financial system they want to. Blocking a user's CBDC bank account or wallet is easier than ever. Combine this with the social credit system and digital tracking and you have arrived in Orwell's world. This is also not only relevant for users, but businesses. They can easily stop you from accepting payments whenever they feel like it. They can devalue the money you have at will and thereby force you to spend it on goods and services. Do you understand yet why CBDCs are the gateway to fascism of finance? What about other implications? What about stablecoins? I mean, they mirror the dollar and we use them. They are great, right? Yeah, they will probably die. I don't see a future in which a dollar digital currency and dollar stablecoins issued by companies coexist. I'm curious to hear arguments of the opposite though, so if you have some, let me know. Facebook once tried to create their own stable non-dollar backed currency Libra, now rebranded to Diem. Here, central banks quickly jumped in and said, yeah, you're not going to do that. The fear of being replaced by a company as a competitor was too large, the love for being the monopolist oneself too prevalent. Well, there is a different beast though. Bitcoin. Raoul Pal called it the cockroach in the room that you can't kill in his video. And that's true. Central banks can't kill Bitcoin. Now what they can do is make on-ramps into the Bitcoin network much more difficult. And the CBDC makes this even easier. Implement a simple rule: CBDCs can't be exchanged to Bitcoin. Now what? Nothing really changes actually. Adoption could slow, but you can still easily circumvent the rule by selling something digital for the CBDC, like a PDF or whatever, and put private keys for a specific amount of Bitcoin in there. Or encrypt them into an image or string of emojis. You can't stop information, sorry. Just make Bitcoin illegal and see what happens. We have seen it time and time again how the market goes down a little bit only to go up even stronger after that. When gold was confiscated in 1933 through Executive Order 6102, it actually became more valuable, not less valuable. And all I've said so far disregards Bitcoin's game theory in play. While some countries implement CBDCs, others will allow you to use Bitcoin, or go even further than that, by buying Bitcoin. El Salvador is the first and probably won't be the last. The number of governmental leaders around the world that embrace Bitcoin is rising as well. Like the newly elected New York City mayor Eric Adams, who wants to make New York the crypto capital. Florida and Texas have similar ideas. More and more politicians are taking part of their salary in Bitcoin. Texas has welcomed the Bitcoin miners who fled China with open arms. So we are very far from complete illegalization. In fact, we are moving the opposite way when it comes to Bitcoin. If you want to understand why it makes sense for governments to adopt Bitcoin, then go ahead and watch my video on that subject. It might just be the only way for central banks to stay relevant. In summary, short the banks, long Bitcoin. Choose money for the people, and thank you for watching.